Hello everyone, this is Fair Value Finder, and today we are looking at SCHD. I had a comment on my cash flow video from Money Talk 2994 who asked why I don't just buy into the SCHD ETF. So I wanted to take a look at it. We can look at the top holdings and see, is it better to buy shares individually or to own an ETF such as this? Now, if you want to go the easy way, you don't want to do all the research, you just want exposure, an ETF could be a great option. I mean, you are going to be paying some fees for that. Those fees tend to be pretty small. We see the expense ratio is 0.06 for this stock. So you're giving up a very small amount, but still, it's not something that I want to be giving up. Here we have the holdings, and we can see that it is very diversified, spread widely across sectors, mostly in industrials, healthcare, consumer defensive, with quite a bit of financials and technology, and then the trickle of everything else. But their top 10 holdings make up 41.5% of the total holdings of the ETF. So they're invested pretty heavily into these stocks here. PepsiCo, that's not one that I owned. That's one that I've looked at previously. I thought it was overvalued. I need to look at again. So that can be a future video. Coca-Cola, we've already determined it's a hold. It's overvalued, but the numbers are good, so I wouldn't exactly sell out of it. I probably wouldn't want that to be my second largest holding. I'd want something that has more upside potential. Merck is one that I really like. I own quite a bit of it. I've kind of traded it over time because it reached an incredibly high valuation, and I sold out half of my position. And once it gets back below $100, I'd look into getting into it again. But again, I wouldn't have it being this much of my portfolio. Verizon, I own some Verizon. It is a very beaten down stock. I feel like I might just want to take my losses and get out of it. The telecom business is not really something that I'm looking to be in after my experiences with AT&T and how that one's looking. Chevron I've owned in the past. It's a good oil play. I don't currently own any. I got out when the oil stocks went just insanely high, and I took my money, invested elsewhere. Maybe it's time to look back at this one, but it's something that I don't own at the moment. Home Depot is one that I've been wanting to get into. I haven't really run the valuations on that, so we can do a video on Home Depot as well. AbbVie I gave a hold. Price is just a little too high for my liking. Again, I wouldn't have it being 4%. Like, if I give it a hold, maybe 2% is what I'd have. If it drops down, I'd work my way up on it, but 4% I feel like is a pretty hefty for a ETF that holds more than 100 different companies. Amgen, never looked at before. I'd have to look into. The same goes for Broadcom and UPS. So one of the main reasons why I don't hold it is because I don't have control over the shares. It's just all lumped together in ETF. So if I feel like something's overvalued, if I own the shares, I can get out of it, trim my position, whatever, and have some flexibility. But if I'm just holding this ETF, I'm just at the whim of the managers. And then there's the expense ratio. So I'm paying a little bit to just own this. And if I were to outright own the shares myself, I'd of course try and own 100 shares of the companies, and I would be collecting the covered call premium, selling those and hedging my position. Now, do I think owning an ETF such as this is a bad idea? No, not at all, especially if you don't have the money to outright buy a whole lot of shares and you just want the exposure. I'd say it's a pretty good place to park your money and wait until you can build up a strong enough cash balance to buy something else. The dividend yield isn't bad. It's in the 3% range. We can go back and take a look at what this says. The dividend is yielding 3.64%. So that is not bad. There are certain stocks that you can get something better, but 3.64 is not bad. With today's interest rates, there are some savings accounts that can yield more than that. Any money that I have sitting in my Robinhood investment brokerage account is earning mid 4%. So I would much rather just have it in cash at that point, especially since I don't see a very bullish scenario for the market as a whole. So I don't feel like holding 100 shares is going to be good for you. Spreading your money out that thin is already limiting your upside and downside. But if you do your due diligence and you invest heavy in individual stocks, you can fetch a much greater return. And that's how the best investors do it. Charlie Munger's talked about how diversifying is one of the worst things that you can do with your portfolio. You need to go all in on something that you really believe in, and then take your profits and invest elsewhere, something else that you believe in. SCHD is not one that I've held in the past. I've held SPHD in the past, made some money, sold out of it. Currently, I am in QYLD, which is one of the only ETFs that I hold. YYY, it's kind of an ETF. It doesn't hold stocks. Different investments like loans that I would otherwise not have exposure to. So I have that. So I have bond and loan exposure and fetch a decent return on those. But as for QYLD, I'm interested in it because it's stocks that I don't typically invest in. And they're doing a similar strategy to mine, where they own 100 shares, sell covered calls, pay that money out as a dividend. And it's giving me exposure to stocks that I definitely would not otherwise have owned, paying me out a dividend, and it's hedging its own downside. So I really like that about QYLD. I bought 100 shares. I'm even hedging that hedge. I have a covered call against QYLD. My position's 1.8K, and I sold a covered call that fetched me $60. So if QYLD goes down, I could potentially get 3 shares for free of that. My thoughts on ETFs, they're not bad, especially if you have a small amount of capital, but it's just something that I'm not going to do. I'm looking for a greater return than that, and I want more control over my money. But this has given me some stocks to look into. I will definitely be looking into Home Depot and PepsiCo, potentially even Amgen, Broadcom, and UPS, just to see why are these being held by SCHD and why they have such large weightings. Are they that good of an investment? Have they just grown on them so much that it's inflated the valuation? And that'll be something interesting to look at. So I want to thank you guys for watching. Please let me know if there's any other ETFs that we want to take a look at, or any individual stocks. So it's just a quick, interesting video, and hopefully I can do more like this.